Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, March 6th, and we're going to take a look really quick here at the Nasdaq. And one of the trade steps we were trading today in the trading room, which was a short in the Nasdaq and short in the indices as a whole, based off of A, bearish momentum on 240s, 120s, and 60s, and then B, we had this run stops here. Now we've talked about run stops a lot. I've done a lot of videos on this. If you don't understand what a run stops is, just search run stops in our channel here on YouTube, and you'll find several different videos talking about it. But essentially, what we are looking for is we broke through the pivot high here. Immediately after breaking, we turned around and closed down below it. So it left that long wick to the upside, and it failed to rally when breaking through resistance. Is basically what we're looking at. So failed bullish often turns bearish. That triggered as soon as it broke that previous bar's low. And then away we went, and you can see Nasdaq just proceeded to sell off throughout the day. Now, keep an eye out for this type of thing, and keep in mind when we're looking at these types of markets, we can have short-term setups like this that trigger nice intraday moves, but remember to always pay attention to your longer-term charts, because longer time frames, we're just kind of choppy right now. We're flirting with this resistance up here, the previous resistance we were in with the Nasdaq, and then if you go look at the S&P, we're flirting with the previous resistance, the pivot highs, pulling back. And the reason I say make sure you pay attention to these longer time frame charts is because we don't really expect really large moves until we break out of this compression. All right, so we can have intraday setups that trigger and then that start to follow through and they play out really well intraday, but we don't want to hold them for a swing trade until the longer time frame triggers. And right now, what we'd be looking at, for example, and what we're watching with the S&P, is all this support down here, right down around 2764. If we can break below and stay below 2764, then we should see the S&P stay down, and that would suggest it continues to run. So big picture, pay attention to longer time frame charts, but you're still okay to take intraday trades based on intraday setups. Just remember, setups are kind of dependent upon the time frame you're looking at. The longer the time frame you look at, the bigger the expected move. The shorter the time frame you look at, the smaller the expected move. So again, that's it for today. Big point for today's video is just pay attention to the time frame you're trading on. Understand that longer time frames trigger bigger price movement. Smaller time frames trigger smaller price movement. It's okay to trade both, but you just have to manage your trades accordingly. But that's it for today. I'll see you all bright and early in the trading room tomorrow morning. Don't forget to like and subscribe. And until next time, everybody, happy trading.